4 days of the week, first 4 days of the trading year. Last week, gold was up. Well, I guess it was down one day, but it was up $45 on the week.
Right.
Gold mining shares at GDX was up 10% on the week. Gold is up, like you said, Jim, sniffing it out. I mean, it found that bottom at 1625 3 times last fall, and now it's 1880. What was that, $260 on what's that, 15% already? Wow. Okay. And silver's up from 1750 to 2450. So they are sniffing it out. Now, I don't think they're not going to go straight up from here, and it's going to continue to whipsaw. It's just when you think it's ready to, I'm sure the banks will act and jam it back down. So we'll probably go sideways to begin with. But once this gets going again, there's a couple of factors that are really going to tell the tale as to whether this will be like the rally, where mining shares go up 10 and 20 times, and stuff like that, and whether the metals really break out. One will be public perception. I mean, how many more times is everybody going to buy those lies, Jim? The Fed, the balance sheet's going back down, and we're going to normalize rates. Look, the three of us are not like geniuses, right? I mean, we're not wizards and alchemists. No one's going to say, hey, Ivan, Jim, and Craig, they're the smartest guys around. We're just talking about math.
Right.
I mean, this isn't complicated. And as they hike rates, not only does, you got to refinance and refund and issue new treasuries at those higher rates, but also the economy stalls. And so tax receipts start to go down. And so that gap, the deficit widens, and the whole thing just spins that much faster. So they're not going to, this isn't complicated. Okay. But you get this agenda shoved down your throat by financial media and the banks and the investment houses that, everything's, no, it's not. So one, does everybody finally not believe them this time, so that gold doesn't go up to 2,300 and then just fall back to 1,800 the next time the Fed says they're going to tighten? Does everybody say, no, you're wrong, and it just keeps going? The other part is, and this is, again, a chart that I include prominently in that annual forecast, physical metal stocks around the world have been dwindling for a decade. And not just gold and silver. I mean, and not just in New York. Everybody follows the COMEX vaults and all the shenanigans there. I'm talking Shanghai, London, every place else where metal is stored. And it's copper and zinc and lead and nickel and aluminum, and all of them are just dwindling away. Right. So as demand picks up and price rallies and China reopens, that was one thing that we didn't get last year. But now as China reopens, where's the metal come from? Where does the metal come from? Where's the copper come from for copper demand? Where does the silver come from? You guys, I'm sure, saw the Silver Institute study that came out in November, December. So we're already going to run about a 200 million ounce supply deficit this year. Where's the silver come for all their solar panels and wiring and batteries and everything else?
Well, they're draining the vaults, right? They're draining LBMA. They're draining COMEX.
Right.
I mean, there's certain market-oriented exchanges that have it above ground vaults where you can go get it, right? Sure. SLV, they can drain SLV, right?
And then what?
Yeah. But you're right. Gradually, the above ground supply that's easily accessible. There's only so many people who are willing to sell grandma's silverware, right?
Right.
There's only so much of that out there.
Right.
There's only so many that, everyone's seen how low the COMEX registered inventory is getting.
Right.
A lot of that stuff that's in eligible category is just in long-term storage. It's not available.
Right.
I mean, it might come off the sidelines at 30 or 35,
right,
but it's not coming off the sidelines at 23 or 24.
Right. And what happens once you chew through that?
Yeah, once you chew through, we've all talked with Keith Neumeyer. He's projected that come 2027, the deficits are so big, hundreds of millions of ounces per year. Industrial demand versus what's coming out of the mines. The mines are producing 800 million ounces. The industrial, everything, all the demand out there is well over 1 billion. So there's easily 200 million ounces a year that's coming out of the above ground supply that's getting consumed by industry and ended up in landfills. And prices aren't nearly high enough to go mining landfills, right?
Right. Right.
And no one's even tracked what landfills they even put that stuff in. So I don't even know if that's possible.
But those are the two factors, guys.
Yeah, no. At some point, I think it was Keith who told me, and Keith runs a multi-billion-dollar company, and he has.
Right. He's not just some guy on Twitter.
No, he has analysts who figure this stuff out, who work for First Majestic, and his data is probably as good as anything you're going to see at Metals Focus or anything, right? Because he's got people he pays to actually study this. And he's pretty damn certain that come 2027, someone's not going to get their silver. I mean, the deficits are going to be so huge that certain industries are going to get squeezed out of the market because there's just not enough silver around.
Well, and at some point, you run into this, you like to think it's coming, where the banks, which are in, control the price between the physical price and the digital price, and the futures price. I mean, and they try to piece it all together on a daily basis. Say, we don't want to play this game anymore. We made a lot of money at this over the decades. Mm-hmm. But there's no value in us continuing to short this price and provide the contracts. And I don't think we've gotten there yet. I mean, we're seeing silver's been capped at $24.50 for the last month. But why? Well, once you start moving through $24.50 and $25, it came down so fast in April. It moves to $26.50 and $28 pretty quick. Right. Then all your shorts you put on, if you still have them on from 2 months ago, now you're really getting buried. So we're still fighting that, but at some point, that's not a very good business strategy either. And we know about all of the Department of Justice investigations and the JP Morgan guys that are going to the hole, for manipulating price and all that kind of stuff. Right. As we transition out of that system, that's just enough. So again, what I'm getting at is those are the two variables. Will we reach a point? Will this next rally be the one that nobody fades? That says, I don't believe the lies of these central bankers anymore. We're never going back to whatever people thought was normal 20 years ago. The paradigm changed in March of 2009 with QE, and we're never going back. And I'm not buying it anymore. And then also, do you get this point where this current price discovery system, where you've got these digital derivatives that are traded, and then these banks have to somehow manage physical flow into that price. Right. If that just finally just goes away, to be replaced by something else. But look, without getting into the weeds of all that, it is just extraordinarily important for people to understand where we are and to not get so short-sighted that they buy the lies and the spin and the propaganda that's put forth by either the media, their stockbroker, whomever. That rates are going to 5% and 6% because the Fed has to get rid of inflation. Look, inflation is going away as it is. They've so over-tightened, it's going to come back down. Prices aren't going to go back down to where they were 3-4 years ago.